Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our situation, our analysis on euro currency. So today there are a few moments that we need to pay attention to. On the daily chart, at first glance, nothing is going on. So market mostly stands in the same area, but here we have the very important detail. That's market coming to the MACD predictor line. Today, maybe we will not see the touching of this indicator, but tomorrow it's quite possible. And not only on the euro currency, but if you take a look at the dollar index, you could see the same story. So here might be the testing of this indicator in the nearest 2 sessions. And as you understand, that I'm speaking about the potential bearish grabber that might be formed here. In the previous 2 sessions, we have discussed in details why we suggest that downside action in completion OP is still possible before market will show any other upside reaction. And there are a lot of moments for this. From technical point of view, this is a significant technical momentum and impulse to the downside. It's also uncompleted target. All this stuff creates the background for a possible attempt of the traders to challenge the lows. And finally, the lows that where market stands around 104.80, 104.60, it's very important long-term lows I've already shown you. So it's really very significant amount of stops probably placed below these lows, and challenging of it could bring really big bargain to market makers. So this is potential risk for any long position prior the market will wash and rinse of these lows, or at least complete the OP. And price flirting with the MACD line today, it's just another point in favor of this scenario. So later I also will show you intraday chart, right? You will see other reasons why market actually could retest lows. But on the daily chart, this is what the factors that we have just specified, which makes us to not consider taking long position by far, at least on the daily chart. On the lower time frame, take a look at the 4 time frame chart. Here's the situation stands the same. So market stands in a flag consolidation, which is also classically bearish. So the flag is a continuation pattern from the classical technical analysis. And that also corresponds to the idea of the possible challenging of the lows. Now I come into the most interesting thing. If you will take a look at the price performance yesterday, you could recognize the weakness of the market. Yesterday we said that actually the same that I said just 2 minutes ago. So we do not consider taking any long position by far. But still, if you would like to take a long position based on the recent upward action, we said try to do this at least around strong support cluster. So it's 105.40, 105.50 is at least an area that could save your money. You could it could provide you with a bounce, and you could move stops to the break-even. So this idea was correct. So indeed, market's flirting around this strong support and showing the upward action. But now let's consider overall structure of the swings, how to estimate that market actually shows the weakness. The core of this stands actually right there at this point. Why? Because take a look, we have an extensions A, B, C, D. Here's probably COP, or some extension of the COP minus 618 extension retracement. It's also got a steeple to sell, right? Then extension to the OP, which is absolutely normal. Retracement, and take a look at retracement was very strong, very deep, which is not bullish. Overall CD leg is a bit slow compared to the AB. And now take a look what has happened. Market has tried to reestablish upward action, keep going with this overall tendency. And since the major retracement is already right there, this should be action right to the XOP. But what you see currently, it has slightly exceeded the OP and now is failing, moving down. So that might be the failure attempt of the market to keep going higher, which is also shows the weakness of the market. And this is final reasons why we actually do not consider any longs by far and prefer to wait and see what will happen. Because chances, as I said, of the just flirting around the previous lows, challenging these lows, completion the daily OP seems significant. Although I am not exclude that overall background is slightly becoming quieter, market is showing some preparation or readiness for a possible upper reaction, some retracement. Because if we take a look at other markets, for instance, Hungary British pound, so you can see some kind of the also performance difficult to call some hand and shoulders, but some kind of the rounding bottom is forming. If you take a look at the 10-year bonds, we already talked about this. Here's we have multiple bearish grabbers and suggests that market should drop somewhere to 4.25, so show some minor pullback. Of course, it just maybe will not happen, but at least technical indicators currently exist. And this is the reason why we do not exclude the chance that once market will complete the predefined target, it still will try to show the retracement. That's absolutely normal, especially because this 104.50 OP target on the daily euro currency is more or less significant, and actually lows that we have here are also significant. But with all these tricks on the table that I have just shown you, our suggestion would be, at least if you're conservative enough, do not hurry up with taking long position by far.